Hi everyone, this is Dimitri Pergamonic with MarketChameleon.com. I want to demonstrate quickly to you how you could use the earnings stock pattern screener. And what this screener does is it looks historically around earnings on every stock and sees how it tended to perform before, during, and after earnings. And one of the ways that you might want to use it is, like, suppose you're looking at currently the stock market is strong, it's rallying. Earnings season looks good. Stocks are performing really well during earnings periods, and you wanted to look for stocks that had historical run-ups into earnings. So prior to the earnings release. So let's just do an example scan, just to show one way you could potentially use this screener. And the first thing, what we're going to do is, since we're looking for high frequency rate, we want to see the win rate to be relatively high. So I'm going to put it at above 70%. So I'm looking for a specific pattern that worked at least 70% of the time or more. And also we want to look for high average returns or positive average returns. I'm just going to set this right for now at 1%. And as I'm filtering this table is going to start narrowing down more and more. And I'm also going to set the median return of at least 1%. And what this does is it looks at the average returns of the last 12 quarters. And perhaps the average return gets skewed one way or the other because of an outlier, then the median return is that at least half the returns are 1% or more. And that's what this is doing. So now, since these are looking for different time frames before earnings and after earnings to see how the stock performed. And since we're looking for historical run-ups into earnings, not including the day of earnings, I'm going to set this time frame to 2 weeks before earnings, not including the day of earnings. So historical 2-week run-up. Also, for now, let's sort this by highest win rate. So we're going to take a look at which stocks had the highest win rate to go with going 2 weeks into the earnings. So we're only looking at stock returns right now. The idea is if you historically bought the stock 2 weeks before earnings, sold it the day right before earnings, well, what was the win rate and what was the average return? So let's also just use another filter and let's do higher market cap. So I'm going to set this to 10 billion. So now I'm getting the higher market cap stocks popping up. And here we have like Visa, Google. So we could see Visa, 92% of the time in the last 12 observations, the stock increased in price going into earnings. The average return, the average of all 12 is 1.9%. This is the median return. This is the best return in those 12 observations. This is the worst return. This is the standard deviation of the returns around the average. And this is the Sharpe ratio. So the Sharpe ratio is taking the average return, dividing it by the standard deviation to get this ratio. The higher this ratio, the better, because you want a higher average return for lower standard deviation. Also, here we have the next upcoming earnings. And if you wanted to replicate the 2 weeks before, day before, it tells you how many days to open. And it actually will tell you the open date and the close date over here. So this is days to next earnings. So this one, the open rate is already -8. So this one's already passed. So another thing over here, maybe you want to see if there's anything coming up that you could open today. So you just put today's opportunities, and then there's 2 of them that the open rate would be today, and then it'll list you the close rate over here. I'm just going to let go of this. You also could filter by Sharpe ratio. So if you just wanted a higher Sharpe ratio, you could say like above 75. So this way you keep narrowing down the stocks more and more. Obviously, if anything's going on in the stock market, any kind of bad news, you have to take that into consideration. There's no guarantees that the history can predict the future with 100%. We're just using this as guidance. And if the stock market's going down, or there's some kind of SEC investigation, or that the historical data doesn't know that. So before you do, guys, always do your due diligence. do your research. But this is a screener that will help you out looking for specific types of patterns around earnings. Thanks everyone for watching, and see you next video.